Breaking economy news, Yellen's semiannual monetary policy report testimony before Congress, her opening statement on day one before the House. The market panic this year has not affected the Yellen view of the world yet. The markets went absolutely bonkers this week with fears of negative interest rates, worldwide recession, a broken banking system, European bank solvency, and of course the dangers and risks inherent in $20 oil. But the Fed chair barely acknowledged the market's gloom and doom fears, which seems to have a calming effect on markets for now. The economic outlook is uncertain, but heck, that's always the case, she said. Okay. But the January Fed press statement, their latest operating instructions, said they were closely monitoring global economic and financial conditions to see if it altered the balance of risks for the economy. Those risks were balanced in December, that's why they lifted off. Is the world balanced now is the million-dollar question, or is the globe spinning out of control of central bankers? That's what markets want to know. The statement today is a little too short on clarity for our liking. Is a March rate hike on or off the table? Answer the question. Well, she did. Monetary policy is not on a preset course. It depends on the incoming data. We guess this means she doesn't know what direction she wants to steer the committee in at the upcoming March meeting. Precious little to go on in her statement today when it comes to forecasting the path of rates. But at least the word gradual stays in the picture. The market doesn't even want to see rates go up gradually. They think the world economy and bond yields are locked in some kind of death spiral that will force the Fed to cut rates again. She did say financial conditions have become less supportive of growth, with lower stock prices, higher junk bond yields, and a stronger dollar. If this trend proves to be persistent, then it could weigh on the outlook, she said, even though lower bond yields and oil prices, she admitted, are an offset to these other financial conditions headwinds. Okay. Another rate hike depends on where the markets are next month, in addition to incoming economic data. We get it. They are waiting and watching. Their policy preference is to watch. Net-net, Yellen did not cave into the markets in her opening statement before 2 days of congressional testimony. The U.S. economy is not off track yet, even if it has taken some blows from the financial market turmoil and weaker economies overseas that are still dealing with weak commodity prices. Our best guess is that March remains on the table for a rate hike, even if the Fed is less convinced that the risks to the outlook are still balanced. They are closely monitoring developments in world markets and economies and looking to see if the weakness over there comes over here. We'll see. Our guess is the economy here will remain stronger than you think, but conditions have to be monitored closely in the weeks before the Fed's next decision date on March 16. With this, we in the Federal Reserve can agree. Stay tuned. Story developing.